we don't know what's going to happen next, but we feel like something big is happening and gold's the lifeboat. So we're going to sit there until we know. What's your take on what exchange is occurring? Is it US dollars for gold? Is it US dollars for a basket of other currencies? What action are you seeing in terms of central bank swaps like this?
It's an important question as well. I was talking to Andy before about military analogies or military history overlapping with financial history or central bank policy or monetary policy. And to your point, Grant's really important is also to keep in mind keeping this a balanced, not sensational discussion. John Maynard Keynes warned against weaponizing the reserve currency. Robert Triffin, a famous economist, came to the Congress in the 1960s, said, don't go there. Even Barack Obama in 2015 said, don't weaponize. It's going to create distrust for this neutral reserve asset. And to your question, well, what do you do if you don't trust the US dollar in the same way? Because now it's been politicized and weaponized in an aggressive way since the sanctions against Russia, whatever we or you think of that very debatable war. And I look at it in terms of a military analogy. What are we seeing? We're seeing central banks, especially in the East, stacking physical gold and dumping US Treasuries. US Treasuries are very related to the US dollar and the Brent Johnson milkshake theory, again, for which we all respect, and ultimately come to the same conclusions. When I see central banks stacking physical gold at these record levels and dumping US Treasuries net at record levels since 2014, to me the analogy is like if you're watching Robert E. Lee march the Army of Northern Virginia from Virginia into Maryland on his way to Antietam or on his way to Gettysburg. You don't need to be a military genius in Pennsylvania or Maryland to see something's coming. It's a shift. It's not the end of the war. It's not even the beginning of the end of the battle, but there's a movement. Farmers, soldiers, scouts, picket lines are saying something's coming. When you see central bankers no longer trusting the US IOU, the US 10-year in particular, and no longer settling at the same levels in US dollars, that's a movement that there's a distrust of this once revered world reserve currency. In fairness to Brent Johnson, let's also not forget 80% of global trade settlements are settled in US dollars, 60% of the 110 trillion in banking settlements are collateralized in US dollars. This year in 2023, more than 85% of FX transactions were in US dollars. To Brent's point, the derivatives markets, US dollars, the petrodollar, for now, still US dollars. The eurodollar market, still US dollars. The US dollar is not going anywhere tomorrow. It's not the end of the world reserve currency. To Rick Rule's point, I think that hegemony of the US dollar is changing irrevocably. Once you break trust like they did in 2022, and to your point, Grant, so that was as big a watershed in 2022 Q1 as August of 1971 when we welched on the Bretton Woods gold-backed dollar. So it is slow, algorithmic, and then all at once. But to Brent's point, the US dollar isn't going anywhere. It's still very important for all the numerical statistical numbers we can give. But I think it is something that you can't also now ignore. And this death by 1,000 cuts of the inherent purchasing power of the US dollar began in 1971. The US dollar has lost 98% of its purchasing power when measured against 1 milligram of gold. Well, that was the year I was born. We're talking 19 cents, over 50 years ago. It's going to take a long time for the end of the US dollar as a world reserve currency. But if you had asked someone in the British Parliament in 1890 or 1895 if the British pound sterling would ever not be the global currency, they'd have probably laughed at you in 1890 or 1903. Fast forward World War I, World War II, the loss of Suez. So none of us know what could or will be the tipping point, but we are clearly heading in that direction. But also, in all fairness to Brent Johnson and the milkshake theory, there is a massive straw sucking on that US dollar. The one thing, if Brent were here, I'd ask him is there's not a similar straw for that US Treasury, and that has implications for the US dollar.
You mentioned 1971 and similar activity, or maybe the beginning of this activity. The reason it struck me as an interesting point, Matt, is what's different about today versus the activity we saw in 71 when the world had a super important signal that they should all lose confidence in the US dollar. Yet, that was the year you were born. Here we are, still in the US hegemony. So now we can say, oh, but this time they sanctioned reserves from Russia. That's a big event. But so was that in 71, right? And so just to bring perspective into this, could we be having this conversation, right? Another 50 years down the road and another event and essentially repeating. What's your take on this time versus that time?
It's a very different world, obviously. One of the most obvious differences is our debt levels, to your point. 400 billion in 1970, 71, 34 trillion today. OPEC nations really want a gold-backed a US dollar petrodollar. Why would they want that dollar? When we welched on the US dollar having no golden chaperone, what was Kissinger and Nixon doing right away? Trying to strike a petrodollar deal to create synthetic demand for that US dollar, because now we could print as much as we want. People were worried about it. So we had to make that dollar look more attractive to OPEC, so that the world would have to buy oil in US dollars. Volcker raised rates by 15%. Real rates were 5 to 8%. They were trying to make that US dollar look viable to the oil producers of the world. Well, now, fast forward 50 plus years, we have $34 trillion in debt. We have way too much stress on our US dollar, regardless of what you think of the DXY's future. Powell cannot be Volcker. He can't raise 15% interest rates to make that dollar sexy, because Uncle Sam can't afford those interest rates. We've hit that fiscal dominance that Luke Groman talks about. It's a very different world. 50 years of living beyond our means in debt and thinking we can have deficits without tears is a fantasy. And that is why there's less interest in those US Treasuries. That's why there's more pressure on a Fed that really is damned if they do, damned if they don't. They're cornered now. They raise rates, they crush everything except the US dollar. They do nothing, they debase the currency, and we have victory maybe in the S&P, but the inherent purchasing power of our currency gets neutered like a glass of wine with a bucket of water poured in it.
I look at the conflicts breaking out around the world with a bit more concern, because I think about the escalation trajectory, how many major players seem to be involved in so many major conflicts right now. What's your opinion on this? Are these wars opportunistic in their timing because the global empire maybe is a bit more fragile than it was 10 years ago, and now is the time to strike?
I use this quote all the time from Ernest Hemingway. Well, first of all, I think you need to put the template in play. I think you could take a calendar and a compass and a calculator and look at any time in history. When you get a nation that's over its skis in debt, which America clearly is, despite its iconic past, it's a debt-soaked nation. You go from a debt crisis to a market crisis / financial crisis, which inevitably becomes a currency crisis. And that currency crisis always, without exception, is responded by extreme political centralization from the left or the right, every time in history, without exception. We are seeing evidence everywhere, more centralization, from Canada to the EU to the US. I live in all those places, except I don't live in Canada. Half time in America, half time in Europe, every conversation, more and more centralization. So geopolitics matter. The petrodollar, the geopolitics there, the war in the Ukraine, the escalation in the Middle East, these are all, you could spend 30 to 40 minutes on each of those. But what is a template is clearly more debt desperation, more currency destruction to monetize that debt, because regardless of the DXY or the dollar's relative strength, its inherent strength is weaker and weaker and weaker. But regardless of that, which is an important distinction, the centralization is concerning, the geopolitics are concerning, but the real blame is in the bathroom mirror of our central bankers, not Putin, not COVID, not men from Mars, not all the things that the media wants us to focus on, because it's our own central bank policies, our own politicians that are spending way more than they earn and looking for something else to blame. And that's where Ernest Hemingway had that famous quote: "You'll always, when a country goes broke, see political opportunists, left or right, you decide, whoever you want to pick on. You can pick on Trudeau, you can pick on Biden, you can pick on Trump, whatever you want. You'll see political opportunists buying temporary prosperity by debasing their currency to get political votes or even a Bernanke Nobel Prize in the short term, but permanent ruin through distraction and war." And what do we see right now throughout the world, wherever we travel? More inflation, hidden, misguided, misreported, but felt by everyone in this room. And permanent war since I was born, Vietnam to Afghanistan to now proxy wars and who knows what happens in the Middle East. Permanent ruin by political opportunists who will not take accountability for failed policies, whether it's weaponizing science during COVID, weaponizing the media, weaponizing the Department of Justice, weaponizing our currency. We live in an era where this is not sensational anymore. I'm the most boring person, but if you study history and math, this is not a gold bug argument from a guy in Switzerland. I made my money speculating. I'm not against it. I'm just trying to preserve myself from these opportunists who are creating permanent ruin in real time. This is not hypothetical to me. I don't have a central bank that's protecting my currency. I have to gold back my own euro, dollar, Swiss franc on my own. And that's not a gold book bull selling my book. That's common sense in history, far more than risk asset projections or political forecasting, which none of us can really do.